think flows of capital into the UK have held up pretty strongly, to be honest. I think that through the last year, huge amounts of international capital have identified London in particular, but also some of the regional cities as a good target, and certainly currency was one of the reasons for that. I think when you look at interest rates, I think a lot of people are looking to the US now to think, what will the impact of the taxation reforms with Mr. Trump, what will that have on inflation within the economy? That could have a knock-on effect on interest rates rising in the US a little earlier than one might expect. That would undoubtedly have an impact on Europe. But I think you've then got to think about the sensitivity of real estate to interest rates, and it's not a direct relationship, but certainly, rising interest rates would certainly have an impact on people's views of the markets. The continental markets have performed very well, and I think at the moment, the top 5 cities that were identified by our investors as the sort of key targets from a European perspective started with Paris. And I think Amsterdam, Frankfurt were also in that top 5. London came in at number 5. But when you actually grow it to a global audience, London shoots back to the top. And so there's definitely a difference between European capital and investor intentions and perhaps global capital from US and Asia.